I can hear you loud and clear. Robert, where do we really start from? Because what we really have for today, inflation, investment, and economic outlook, are like topics that you really have to do research and write thesis on. If you really want to take them one by one in Nigeria, you can't even exhaust all of them. But let me try as much as possible to take those three and also try and break it down for our viewers. What are your thoughts on inflation, first of all? Inflation came in printed in May, 17.7%. It's not yet abated. We're still seeing heightened inflation. What are your thoughts on those?
Well, we think on inflation, we're not likely going to see a respite in the near term. And this is because, as we speak, inflation has become a global phenomenon. Right. I think in the course of your program, you had highlighted the struggle of the U.S. Fed at the last FOMC meeting, which had to hike interest rate by about 0.75%. And this is consistent across board in Europe. ECB is planning to do the same in July. Bank of England has followed the same pattern. And even within our territory, sub-Saharan Africa, Ghana has consistently raised interest rates to combat inflation and to attract more FPI. Our own MPC at the last, MPC meeting did the same by hiking interest rate by about 150 basis points. Now, the issue about inflation, like we said, is global, and the Russia-Ukraine crisis is not helping matters. I mean, you will notice that since the beginning of the year, particularly when the striking happened in Ukraine in February, we've seen energy prices much elevated, and energy prices has its way of, feeding into the headline inflation across board. And even in the US, it's a major struggle. Citizens are even, bringing government to account on their ability to be able to put a rein on inflation. And in Nigeria is major because we have, our food inflation right now is hitting 20%, right? Almost 20%. And this is not likely going to abate because of the security concerns. The fact that food, when you look at major staple foods in Nigeria, wheat is still accounting for a significant part of it because people eat bread a lot. And because the Russia-Ukraine crisis is still ongoing, the two countries account for close to 30% of global wheat supplies. And this is impacting on, food prices. So again, inflation is something major that we can begin to, analyze for as much as we can. But I think the major important thing to dissect is what efforts can be put in place to address the current, inflationary pressure that the country is facing. Like I said, it's not just Nigeria, it's global as we speak.
Okay, let's go to the solutions at addressing this inflation concern, because in as much as I agree with you that the Russia-Ukraine crisis has, worsened the inflationary rate in Nigeria, we also do have our own peculiar challenges, because inflation was even at double digits in the range of 15% before we saw what happened in February, Russia invading Ukraine and making inflation shoot up. What are really the solutions that we should be looking at now reining in inflation? That's number one. The number two part of it is that, do you think that the CBN is doing enough as the monetary authority to reduce inflation? That's the B part of the question. The C part of the question, I hope you are not being bombarded, Robert. The C part of
I'll try my best. Yeah.
The C part of the question really is, you talked about the tightening that we saw earlier from the CBN, of course, talking about the tightening of the rates at 13%. Do you think that has already been priced in, really? And how far can that go in addressing inflation if really the market mechanism still, take into cognizance tightening? God help you.
Yeah, okay. Are you done?
Yes, go ahead. I am.
Okay. All right, all right. So, I mean, if we look at the A part of the question, which is that yes, we had our own issues before the Russian-Ukraine crisis came up. I mean, and I agree with you 100%. What Russian-Ukraine crisis has done is to aggravate, the already, bad situation that we had, and that's why you're seeing. I mean, at some point we were seeing deceleration in headline inflation, because before this crisis, came up. I know he also has his own, attendant impact on energy prices, right? And because in Nigeria today, we say PMS is deregulated, right? But the diesel prices are still not deregulated. And we've seen astronomical rise, right? I mean, diesel prices that you used to buy at 380 naira, 400 naira per liter is now selling for as high as 800 naira per liter. That's 100% hike, right? And if we look at the energy component of the CPI in Nigeria as we speak, it's still consistent with the hikes or the prices that higher prices that we have seen on the inflation side. So that's to say that yes, we had our own issues, but this situation has aggravated it. But what can the Monetary Policy Authority do? As we know it right now in Nigeria, this inflation is cost push, right? Because these are supply side factors affecting the general price levels. And, my view as an economist has always been that it's difficult to use monetary policy tools to tackle, cost-driven price pressures. Now, because what you tend to do is to worsen the situation. And to the extent, we're lucky that there's a break in transmission. I like the fact that you alluded to, you mentioned, the transmission mechanism, right? There is a break in that transmission mechanism as we speak. And that's the luck that we have. Otherwise, we would have seen a much more worsening situation when the MPR hike interest rate by 150 basis points. And if we dissect it, you see higher, energy costs. It feeds into your consumer price index. You see higher food prices. It feeds into your consumer price index. Those are not increases as a result of too much money in the system. It's not because people have more salaries or wages to throw around. It's just because the cost of input for most of those commodities, for food, insecurity is part of it. The fact that, farmers can no longer, be comfortable on the farm without, fearing being attacked. All of these issues are, what will impact on food prices. So they are supply side driven. Now, so an inflation phenomenon is driven by supply side factors, and then we now use demand side factors to tackle it, the tendency is that, if you're not sure and if you're not looking at a proper model, you're likely to overreact and then worsen the situation. And that's the point that I'm trying to make. But we're lucky because the central bank, in its own wisdom, we always use is market tools like the OMO rate, and then the DMO, being the major supplier in the market, can determine at what rate it wants to issue, either at the treasury bills auction or the bonds auction. And that's why you will see that even though we've seen 150 basis point increase in MPR, it hasn't really impacted on the market rate. The best we saw was that after the meeting, the next treasury bills auction, rates went up by another 150 basis points. That's at the treasury bills market. And then it started declining afterwards. On the bonds market, we barely didn't even see the impact, of a hike in MPR. So that's the luck that we have from that angle. I think the other question you asked, I'm trying to remember now, so you threw me three major
Yeah,
points.
yeah. Is the
Trying to pick the
tightening?
second or the third that you mentioned on the, what
Okay.
we need to do regarding inflation. I don't know if you can remind me.
Yeah. Robert, you've almost like even answered those questions, really. Those three questions, the
Yeah.
the three triple barreled question, you've almost answered because the third leg of the
Yeah.
question was about if the tightening will really have an effect, bearing that we've seen like weak transmission mechanisms really in Nigeria, and I talked about also the
Yes.
solutions which you mentioned earlier. So do you have any other thing to
All right.
add?
Okay, yes, that's true. So, so because we have that weak transmission, what we then see is what is most important to the market in guiding using the instrumentality of interest rate in guiding the market is what happens at the OMO end of the market. That's the open market operations that the central bank conducts from time to time. And then the, treasury bills auction and the bonds auction, which is, of course, chairman by the debt management office. So to that effect, an increase in NPR has really not, impacted, I would say, on it's not been significant in terms of the impact that we expected, especially on the long end of the market. And to that extent, it's worrisome that maybe before you will see a major impact in market rates, right, through an increase or a decrease in NPL, it will have to be something major, perhaps something as close to, 200 to 300 basis points in one sweep. But even when that happens, the DMO has the control over what happens at the treasury bills market. Of course, because government has a lot of borrowing to do in 2022 and beyond. So, and because they have that control, they can always determine at what rate they want to come into the market. But I also argue that that in itself may not be the solution to our, to bringing down inflation. Because most of the time, if you study inflationary trend in Nigeria, once the problem hits, we always follow through the problem. And then by the next fiscal year, we see a moderation, mostly on the back of base effect. So the high inflationary pressure we are seeing right now, even if nothing is done, we'll follow it through until January, February next year, and then base effect kicks in, and then you see a moderation in inflation. So not so that anything has really changed, but mathematically, base effect has brought in a respite on a year-on-year basis. But in the real sense of it, the impact on the common man, the impact on price levels remain the same. And that's why most of the time, when you argue, people will argue that you're talking about inflation coming down, but you're not seeing the impact on price level. It's because the impact that has been created remains. It's only a mathematical change that we then tend to see, But my view is that sometimes a cost-driven inflationary pressure cannot be tackled with demand-side monetary policy measures.
So much to talk about when it comes to inflation, and I'm being tempted to remain with inflation, but I'm going to resist that temptation because we still have investment to talk about. If you take a look at the investment side of it, we've seen a death of investments into the country. At least the first quarter figures that we have for Nigeria indicates that Nigeria just got about $2.58 billion of investment in the first quarter. That's a drastic fall. I think over 70% sharp fall. How do you think, or what do you really think of this, the investment climate in Nigeria, and why we are not seeing investments? Really, of course, anybody can say, "Oh, Nancy, you're supposed to know that." To an extent, I do, insecurity and all of that. But are there other things that are really fueling a fall of investment in the country at this time, when other countries like Ghana, Rwanda, and co are getting investments?
Yeah. So the insecurity you mentioned largely would impact to a very large extent on foreign direct investments. And again, when you look at the total, capital importation into the country from a foreign direct investment point of view, as well as, foreign portfolio investment, we have seen, a monumental decline, I would say. In 2014, for example, foreign portfolio investment into this country was $14.9 billion, FPI data alone, right? Now, of course, foreign direct investment has been historically low, and it predates, it's been up to going to 20 years now that we suffered, continuous decline in foreign direct investment. That same year, 2014, I mentioned, foreign direct investment was only about 2.3 billion. Meanwhile, foreign portfolio investment, those are, investors who are targeting our bonds market, equities market, money market, inflows into portfolio investment within the country, 14.9 billion. But in 2016, that was at the peak of our currency crisis. After we, it was that same 2014 we saw a decline oil prices from above $100 to below. I think it got as low as $25 in 2014, 2015. And then what followed after then was a lot of demand side management for our currency, in the view to protect the currency, the naira from depreciating. Even though we still suffer significant consequence that between that 2015 and 2016. In 2016 that I mentioned, for example, FPI data had dropped from as high as 14.9 in 2014 to 1.8 billion in 2016. Now, it was after then that the central bank introduced the I&E FX window, which then allowed the foreign currency to be, closely tied to market, what market dictates. And then afterwards, in that same 2017, we saw a jump to 7.3 billion. By 2018, we had hit about 11.8 billion. When we got into 2019, we hit 16.4 billion. That was more than what we recorded in 2014. But since then, we had COVID came, we started our demand side management policies again. As I'm talking to you now, 2021 FPI is at 3.4 billion. And in Q1, the data suggests that we're just about a billion from a foreign portfolio. I'm emphasizing foreign portfolio investment because it's very critical, right? It's critical. And that is what some of our neighboring countries, Ghana, Egypt is very good at that. They've been able to attract a lot of those foreign portfolio investments into their country. Now, it's also helping us to more or less stabilize our currency, because a foreign portfolio inflow into your country helps to build up your reserves, and central bank has more capacity to defend the naira. Because again, there's too much there's over exaggeration of what proceeds we are able to get from the sale of oil. And as we speak, with all of the challenges that we are having, even though oil prices, are up, we are not really seeing the impact in terms of accretion. So foreign portfolio investment is like a low-hanging fruit. But what they look at majorly is your currency pricing. Once they notice some sort of mispricing in your currency, and they cannot be compensated with returns. And let's look at it critically. Right now, the longest yielding instrument in Nigeria from a foreign investment an investment point of view is the 2050 paper issued by the DMO, and is yielding 13%. Meanwhile, in a country like Ghana, you're yielding as much as 19%. Investors will argue that our currency disposition in Nigeria is not too, dissimilar to what you will find in Ghana. So if I can get a 19% yield in Ghana, why would I be bent on investing in Nigeria since I'm exposed to to similar risk? So we have not really seen, our interest rate environment following through the risk factors that the country currently projects in terms of inflation, currency risk and the likes. So when investors are looking at these things, plus there is a major issue, the global route now is causing most emerging market dollar-denominated instruments to drop in prices. As a result of that, even Nigerian instruments in USD are yielding as much as 12-13% as we speak. So, and if you invest in Nigerian Euro bonds that is yielding 12-13% now, you are not subject to currency risk. So why would I bring my dollar flows into Nigeria, convert to Naira, run the foreign exchange risk, even though we claim there is there is an OTC FX market for conversion at a later time when you're going, but supply is still a major issue. So most investors are now looking at investing even in Nigerian dollar instruments in the Eurobonds market rather than bringing their flows into the country. So these are some of the issues that are affecting investment into Nigeria. And of course, foreign direct investment, we've been talking about it. We need to do something significantly major from what we talk about ease of doing business, the need to have power, the need for security in the country. These are things that will drive foreign direct investment into our country. And if you look at the numbers, in a year that foreign portfolio investment was the peak between 2014 to date, was in 2019, $16.4 billion dollars inflow by foreign portfolio investment. Foreign direct investment that same year was less than $1 billion. So that's to tell you, and it's foreign direct investment that is much more impactful on growth in the country than foreign portfolio investment. Foreign portfolio investment is hot money. They come in, they go. But foreign direct investment are much more patient. They can be here for 10, 15, 30 years, and they contribute to growth. So we need to do something major to have a departure from, the current investment landscape that we have. And hopefully the incoming government, depending on who wins, may be able to do something significant regarding that.
Uh, Thank you, Robert, for raising that, because you just took it out of my mouth in terms of what will be like the next challenge for the next administration, whosoever that person will be, or whatsoever party that will come in. There are so many risks. The World Bank did hold its Nigeria Development Update last week. The urgency of business unusual. In fact, when I finished moderating that, in fact, at the venue, I was depressed, and I went home more depressed after moderating and also reading the report. The challenge for the next administration, whosoever that person will be, what are the kind of things that you would want to see? Especially, like you said, investment creates jobs, of course, provides that stability as macroeconomic numbers will improve and what have you. That's the A part of the question. The B part of the question is, what are really the troubled spots around economy right now? Around the economy right now, the troubled spots for you.
Well, we have so many trouble spots, right? But if I'm to pick which one is very damning on the economy right now, right, I would say it's unemployment.
Okay.
Now, today, we have a country where over or close to 100 million of us are living below the poverty line. Now, the poverty line is defined at $1.20 per day. If you convert that to Naira at any window, official or, the alternative market, it's less than $1,000, right? So we have people, 1,000 Naira, pardon me. We have people that are living below 1,000 Naira per day. And with the level of inflation we have in the country today, you can agree with me that is impossible. That you will have good quality of life with 1,000 Naira per day, it's almost impossible. And we're talking about people who have families, maybe it's the father that is earning below, $1.20 per day. And he has a wife, he has children to feed, dependents and all of it. So unemployment is major for us as a country. However, if you must solve unemployment problem, and if you look at countries that have done very well in providing jobs for their citizens, they've been able to attract investment into their country over time. And all these things tie together, right? A country like Nigeria needs a market economy to thrive. Our population is 200 million, right, and counting. The government has limited resources to take care of this population on their own, with a budget of, even with the budget we have today, 15, 16 trillion budget in Naira terms, it's not sufficient to create the kind of jobs that will feed 200 million population. Hence, we need a market approach that will attract, a lot of investors into our country, and those investors will create those jobs that we need to, get our people gainfully employed and drive the engine of growth of the economy. Right now, we're talking about a growth level that is below, on the average, maybe about 3-4%. Meanwhile, this is an economy that has the potential to grow by 10% on a consistent basis. However, the engine of growth is being inhibited because we do not have industries. We do not have, our manufacturing sector is almost comatose. Okay, we don't have people who are investing, in the real sector of the economy, and that is foreign direct investment, which I, mentioned earlier. So all of these things, we have impact on how the ability of people to get jobs. I mean, it's easy to find around. You're driving in traffic, you'll see a lot of able-bodied young men who are trying to, clean your windshield, for the sake of getting something to probably feed and survive till the next day.
Okay.
We need to do something significantly different to get the unemployed people out
Out
of the
of the
street.
street. Okay.
And when we talk about insecurity today, it all ties together. We
Okay.
don't have people who are gainfully employed. There is a threshold, an individual can suffer hunger before they would think, okay, let me even get something. Let me steal to even live for the next day. I
Okay,
mean, so at
Robert,
some
if
point,
you
people
can
don't
hear
care
me.
and they take
Yeah.
to crimes and the like. So they all tie together. It's when the economy is not doing well.
Robert, if you can hear me, I think we'll leave it at that for now. We'll continue the conversation on a later date. So many things to chew and digest, but I want to say many thanks for joining us today. Please join us again tomorrow for a fresh edition of Moneyline with Nancy. Be the best you can be and be that change that you want to see. Of course, I have been chatting with Robert Omotunde, who is the Chief Investment Officer at Afrinvest Asset Management. I'll see you all again tomorrow. Bye now.